Welcome to Accounting Marketing Doesn't Suck. Join host Hugh Duffy as he takes you behind the scenes with successful accountants, CPAs, and industry elites in conversations about growing a more profitable business. This podcast is meant to prove that accountant marketing truly does not suck, and in fact can provide you with new skills to improve your effectiveness so you can learn how to develop a business that you want to run, not a business that's running you.
Hello, and welcome to the Accounting Marketing Doesn't Suck podcast. This podcast is brought to you by Build Your Firm, an accounting marketing firm that helps accountants work smarter, not harder. I'm your host, Hugh Duffy, co-founder of Build Your Firm, and on today's show, we'll be talking to Andrew Hunzicker and Naomi Granger with Dope CFO, which is a practice development firm for accountants who want to work within the cannabis industry or help cannabis clients. I would like to share some insights on Andrew and Naomi's backgrounds before launching into the podcast. Andrew attended the University of Colorado in Boulder, has a degree in finance. He's a CPA in Oregon. Andrew has worked as a CFO in a variety of traditional as well as entrepreneurial firms. He has pharma background. He has energy background. He's worked in public and private. Within the cannabis industry, he was a CFO for two highly visible cannabis startups. Andrew started Dope CFO in September 2017, providing accountants with a do-it-yourself system for developing a practice that is cannabis-friendly. Naomi Granger is a CPA as well. She also has an MBA. She's located in Las Vegas, is a co-founder of Dope CFO as well. Naomi's background has a blend of traditional accounting. She's had an opportunity to work in a top 100 CPA firm, the Siegfried Group. She's also worked at PwC and Ernst Young, and she's had a couple of corporate gigs with Pfizer and Home Depot. With that not-so-brief introduction, it's my pleasure to introduce Andrew Hunzicker and Naomi Granger with Dope CFO. Hello, Andrew. Hello, Naomi.
Hi, how are you?
I'm doing great. I'm really looking forward to this, especially given the meteoric growth going on within the cannabis industry. So let's launch into this. Again, I'm probably going to dumb some of this down for what you're used to, recognizing that most of our listeners have not spent a lot of time. They're intrigued, they're interested, they may have a vague understanding of the world that you operate in. So excuse some of the dumbed down questions that I'll ask, but I'm looking forward to getting into this. So on a national basis, marijuana is classified as a Schedule I controlled substance and subject to federal prosecution. How many states allow marijuana to be sold for medicinal purposes, and how many are recreational at this point?
So I actually just pulled up the map because it changes constantly.
Yeah.
Michigan just actually went rec, let's see, on Tuesday, 10th state to be recreational marijuana, and we have 33 medical at this point. Now, that said, there's limited medical states. So like when I look at this map, legal medical doesn't show up on, for example, Texas. That's partially true. So in Texas, they do allow limited use medical. So if you have epilepsy, there are 3 dispensaries in Texas that sell cannabis, and you can get that medication. And so if you add all those in, I think there's actually only 3 states left where it is completely illegal in all forms.
But with that said, there's also states where it's decriminalized. So even though it's illegal, if you're caught with small amounts, they're not going to really do anything to you because it's decriminalized.
I get you. Okay. And it seems as though the pace of state legalizing marijuana is accelerating. Is that the case, or is that not the case?
That is the case. If you look in the last just year or two, so many states have went on board. When I first joined, I think there were only 6 states that were legal rec, and now there are 10, and that's just been within less than a year and a half.
Wow. And in your word, can you kind of paint or illustrate a picture for our listeners about what you're trying to accomplish with Dope CFO?
Naomi, you want to jump in on that one?
Yeah, so we're just trying to expand the knowledge base. There is a huge need with all these states going legal within the last year or two, and even more scheduled to go legal in 2019. There is a huge need for accountants in this space. They have some very specialized accounting needs, but since they're still federally illegal, a lot of the bigger tier and mid-tier accounting firms just aren't touching the space right now. But it's very specialized, and they need somebody who's trained to do it, because the IRS and the state government agencies are coming after these companies and auditing them to make sure that they're doing things right. And without somebody who's trained to do it right, they're not going to be able to survive in this industry. So we are training other accountants so that they can learn how to service this industry, as well as building a community of professionals who service this industry so that we can bounce ideas off of each other, we can learn from each other, and we can just be the think tank for accounting for cannabis.
That's fabulous. And can you explain the most vexing issues for accountants servicing a business that is legal from a state perspective, but illegal from a federal perspective?
There's so many. We would need a whole separate podcast to address all the issues that cannabis and us as accountants deal with. We tell everybody, if you're a CPA, so it differs if you're a CPA versus a bookkeeper or an EA. You have different regulatory bodies that you report to. So always check with those. So if you're a CPA, check with your state society. I tell people to go to the AICPA.org. They have a page on their website dedicated to cannabis accounting and what you need to know, as well as state positions. Most states have some kind of guidance now for how you can serve cannabis. That's always a big question. What's the risk? Am I going to get taken to jail or whatever? I think the risk is extremely small right now that any service provider, and not just accounting, think of the millions of people serving cannabis in the U.S. right now: plumbers, electricians, attorneys, accountants, bookkeepers, marketers, you name it, soil companies, lighting companies are all serving cannabis. And to my knowledge, nobody ever in any industry has gotten in trouble just for serving a cannabis company. That said, most states have guidance on it. You need to do your due diligence. Just like any non-cannabis client, you need to vet your clients. You need to make sure they have internal controls and whatnot. But that said, then your next step, once you decide you're going to serve a cannabis client, you need to educate yourself and start learning, because there is no, like traditional industries where you would have Big Four guidance, industry guides, gap guidance. Many accountants who may have been trained by bigger firms in those industries, that doesn't exist in cannabis. So there are no industry guides. There's no QuickBooks chart of accounts. There's no gap guidance on cannabis. You have to kind of invent it yourself. That's kind of how our program actually evolved, because there was a need and people were coming to me for help like I was looking for it 5 years ago. And I just basically had to develop a lot of this stuff from scratch. That took me several years. Building charts of accounts for different cannabis entities, building cost accounting work papers, because there just aren't none that exist. And so kind of our program evolved as a shortcut for people who are coming to me saying, hey, I want to learn a lot of this stuff, but I don't want to spend 2 years trying to figure it out. And so that's kind of where we built that, so that we could start teaching the different issues. And that expands into software issues, cash, banking issues, insurance issues, all of it. You can uncover any rock in cannabis and there's problems. Not just accounting, whether it's accounting, tax, operations, whatever it is, there are issues. So it keeps us very busy.
So even the simple things like accounting software are complicated. Can you explain why?
So first of all, there's no QuickBooks chart of accounts or zero. Those are the big two, and really QuickBooks. 95% of the companies I see, big and small, use QuickBooks. There is no chart of accounts. And so you have to kind of wing it on that. Secondly, there is no QuickBooks POS. So if you're a retailer, which is probably about half the cannabis companies in the U.S., you have to go get a separate POS. So in, say, normal American retail, 90% of them use QuickBooks POS. We all know it. Well, in cannabis, there's about 100 POS systems, most of which aren't good because they're all less than 5 years old. So they're still having many, many bugs and issues. And so everything from Greenbits to MJ Freeway to BioTrack to Blaze or Trees, all these new software companies, and you have to be ready to learn and figure out how to use all of them because your clients may be using 10 different POS systems. Then on top of that, every state has a seed to sale tracking system that's required by law in the state to follow. So, for example, most states right now use Metric, BioTrack, or MJ Freeway. All three of those are bad systems. I've used them all. So they're very difficult and cumbersome to use. So at month end, we're often reconciling QuickBooks to Metric to Greenbits POS, and then we're bringing it all together in Excel because that's the best we've got for consolidation. So the good news is for us, because it's so messy and complicated, everything from cash reconciliations to merchant services to all this software, we charge much, much, much higher fees than we would in a non-cannabis industry. And the CEOs get it. They pay more for pretty much everything from, you'll be shocked when you get into a cultivation and you see how much they're paying the plumbers and electricians. But high dollars.
And banking and payroll are difficult as well. Can you explain how that's getting a little bit easier in some of the states that are a little further down this path?
Yeah. So when it comes to like banking, a lot of the banks are just not cannabis friendly. And that's because most banks are federally regulated. So if it's a federally illegal business, then it's difficult to open a bank account. Same thing with anything financial service provided, payroll, insurance, banking, POS, merchant services. A lot of those businesses don't want to touch it because it's still federally illegal, and they see it as a high risk. And so there are some banks that are coming on board. So there's MAPS Credit Union in Oregon, and they do take on cannabis companies, but however, they still have some strict rules. They have high fees, and then they have some reporting requirements that are required monthly in order to keep that bank account open. But slowly we're seeing banks coming aboard.
That's great. So, and is the same thing going on in Colorado?
So yeah, there's banks. So like Oregon, for example, we have Max Credit Union. Colorado, I can't remember who does the banking there. And I think if you Google cannabis banks, I think there's 200 of them, most of them very small credit unions and whatnot that will do cannabis banking. But I feel strongly that the two of the biggest issues that will be hit in the new Congress in 2019 will be research and development, that there's no reason that our universities and pharmaceutical companies should not be able to actually do research on medical cannabis. So I think that will pass quickly. And I think banking is a huge issue. I know Munchin, as the treasurer, has talked about it. California, there's literally billions of dollars of cash being driven around. And it's not good. It creates fraud, and it creates less tax revenues actually making it to the tax party. So I think we all get it that banking needs to be resolved. So
let's go back to what you mentioned earlier, Andrew. You mentioned about you recommend how would a CPA go about, or an enrolled agent or degreed accountant, how would they go about educating themselves about servicing this particular space or working in this space?
So I suggest everyone, get educated. And so I've been doing this for 5 years. I start my day every single day the same as I tell my students, and I've done this for 5 years. I spend at least an hour on my education because I have to stay up to date with the issues. And so right off the bat, I would tell you to get a few key websites that you can opt in to get emails daily. Normal.org is one really good one, NORML.org. They'll send you an email every single day with all the latest political issues in states and federal level, so you'll be up to date. Then I think MJ Biz Daily website and Ganjapreneur website, they have endless information about companies, operations, events, all things cannabis. So you can quickly start learning by following those sites. Also, I tell people join Facebook and LinkedIn groups that are cannabis, digital groups, and you can start being involved in discussions online. And then finally, get involved in real world groups in your city. I don't care if you're in Dallas or Boston or wherever. Every big and pretty even medium-sized cities has cannabis groups that you can join and political activists, and you can get involved in the movement and learn more, as well as big events. So we're speaking this week at the Imperious Expo in Little Rock, Arkansas. That's a big cannabis event on doing a tax panel. And so you can go to one of these events as someone new, and you'll learn about operations. You'll see extract machines, and you'll see lighting companies, and there will be many talks on every subject from operations to accounting. And so you can spend 2-3 days at an event and just learn an absolute ton, not to mention meet a lot of people. So that's a great starting place. And then if you're very serious about it, check us out at Dope CFO, because our program for someone who's really going to get involved actively in this industry, our program is just a shortcut to get in quicker than you could if you got to invent it on your own.
Sure. No, that's great. I appreciate that. And let's take, for example, suppose you're a single firm, CPA firm, single owner. You're interested in servicing this sector because you know it's taken off, or you're trying to prepare yourself, recognizing that your state has either recently legalized it or is going to legalize it just in a matter of time. What segment is the most challenging and which is the easiest?
We want to take a moment to thank today's sponsor, BizPayo, which is short for Business Payments Online. Maybe you've seen some of their advertising elsewhere or the feature article in Accounting Today. Here's why accountants across the country are big fans of BizPayo. BizPayo is an online system for sending out engagement proposals and then getting paid on autopilot. If you hate chasing existing clients for payment, then BizPayo is a tool you need to have in your arsenal. Here are some of the amazing reasons why BizPayo is so popular. BizPayo's engagement tool enables you to send out proposals and client agreements. Once approved by your prospective client, it enables you to get paid electronically going forward with less effort, so you don't need to chase clients for payment. BizPayo accepts recurring and one-shot payments online, both e-check, credit card, and debit card payments with less hassle. BizPayo enables you to get paid by credit card and debit card payments at $0 net costs. This is very different than PayPal, Intuit Merchant Services, and other payment systems that take a fee in excess of 3% of each payment to you. BizPayo enables you to recover those fees, so you get paid for plastic charge card payments at $0 net cost. BizPayo also syncs with QuickBooks Online and QuickBooks Desktop, so all your payments are posted seamlessly. With BizPayo, there's no nickel and dime charges either. There's no equipment costs, no processing minimums, no PCI charges, and so on. So go to bizpayo.com, that's bizpayo.com, and get paid in full like you deserve.
Well, I would say the funny is the easiest to get into is dispensary. So if you're an actual investor CEO, the easiest to get into is a dispensary, because even though it still costs a lot, you got to find a location and either buy or rent the building. You've got a lot of payroll, so it's not cheap for whether you're a dispensary or a farm or an edible maker. Those seem to be the big three where people jump in. Extract maker is a even higher dollar to get the equipment, so you find less of those startups. But dispensaries make great clients because there's so many of them. So Oregon, we only have 2 million people here. We have 500 dispensaries. My town of 80,000 people, Bend, Oregon, we have 23 dispensaries. And they're great clients, even though they are difficult, because for a farm, you won't need a POS system or an edible maker, but for a dispensary, you will. So it's that extra piece of software you have to learn. But again, these people get it that they've got to pay higher fees because there's just a lot of reconciliations done. So that's the dispensary is probably the hardest. Now, the cost accounting is more difficult on a edible or extractor farm. How do you track the cost of a plant over time? So for most farms, a full cycle from planting a seed in the ground to veg, flower, harvest, trim, cure, tested at the lab to where you actually can sell it at a retailer is usually 150 to 180 days. Well, what is the cost of that seed? The raw material may be zero. You may use a clone for free, but your work in process add substantial cost over the life of that plant. You're adding soil, water, direct labor, indirect labor, utilities, lots of electricity, nutrients, and 6 months of time, rent even. So you're having to do some pretty complicated cost accounting to figure out at each month end, well, how much. We've got a group of plants over here that we planted yesterday. So they're only 1% complete. We got another strain of plants over here, 100 plants. They're 99% complete. We're about to sell them to the dispensary. So we have to know estimated yields by crops, what percent complete. We've developed, again, a proprietary, we call it our flower calendar that does all this for the farm to track this in real time, that we can convert it into cost accounting, into the financials.
Mm. Wow. And given how tightly regulated this industry is, can you illustrate the audit risks that are ever present in this industry at all phases?
You want to talk about that, Naomi? And the ultimate case is a great example to Google later.
Yeah, I mean, well, the audit risk, the biggest risk is that they're still heavily cash. And so it's difficult when you have a multi-million-dollar company making sure that every single dollar is accounted for properly, and that everything is done right. Also, because they're highly regulated and having to follow the state guidance and the federal guidance, it's difficult to make sure that you have all of your I's dotted and your T's crossed because of the nature of the industry, and everything is being developed. There's new cases that are coming out every single month. The Altermeds case is one that was just released this summer, and they had a huge $500,000 of back taxes and penalties that they were assessed for just not doing their books properly. But the problem is, they were audited for 2010 and 2011, and the knowledge just may not have been there at that time, or, we're still developing this industry. So the biggest risk is that it's a brand new industry. Things are still being developed. Laws are still being formed, and people are still being educated. And so until we get something crystallized, there's just going to be a lot of this gray area.
So a typical dispensary, how many times in the course of a year might they get audited?
So for when you say audited, there's different people that can audit them. So my dispensary in Bend, Oregon, the state licensed them. So you have your state who's licensed you. So you're not just a coffee shop. You're a cannabis dispensary. So the state, not only can they look at the cameras that are on site at any time they want, 24 hours a day, they can also show up and they can do stings, which they've done to my client. And they actually did everyone in town, where they send in, say, a 17-year-old and see if they can buy pot. So they'll come in and they'll shut you down for your backup tapes aren't long enough, or your fence is too short. They've come to audit all these different things. And then on top of that, you could have FDA or OSHA show up. And then you could have the IRS show up. They're usually a couple of years behind. So like Naomi said, they're hitting Colorado pretty heavy right now, and they're looking at earlier tax returns. They'll be hitting Oregon next, and each and every state, because the IRS gets there's massive tax dollars to be found at these entities. And since so many of them are doing wrong, it's almost easy pickings for them. So you got to worry about them showing up. And then, the final one I was going to mention is the bank. So any bank that does cannabis compliance, MAPS is a great example. They practically do a mini audit of our clients each quarter. And so they look at inspection reports, state seed to sale reports, financials. What else do we show them? The POS reports. It's almost a little mini audit we do every quarter with the bank. And so it's pretty intense.
And didn't I read that there was an Oregon dispensary just got prosecuted for tax crimes?
Yeah. So the guy in Eugene, he actually was bragging to his employees about how he wasn't paying payroll taxes, and one of them was actually an undercover agent, and so he actually went to jail. And so there will be that in every state. So you're going to get, as say 5,000 new companies open in a state, you're going to get a certain percentage that these people are out of the black market. Well, anyone coming out of the black market into the white market, what do we know about that person? Well, they were already breaking laws. And so if someone's breaking a law already, you got to be careful thinking, okay, they're coming out of the black market into the white market. They might be wanting to break a law here. So we, again, carefully vet your clients. There's is a way to make money and be profitable in this business. It's not easy. It's not for the CEOs. It's a hard business to run, but they can do it, and there will be people that will be succeeding in doing this. But yeah, you better follow the rules, because there will be all kinds of agencies looking down your throat. And so, the stupid ones are the ones who are just breaking laws. Same in Denver. They shut down, I think, 16 dispensaries under Sweet Leaf, where they were basically selling pot multiple times a day to the same person, and it was just with who I think we're turning around and shipping it to the East Coast, where prices are a lot higher.
And despite the rapid growth, most major CPA firms are sitting on the sidelines, as I understand it, until the dust settles. Can you illustrate some of the large CPA firms that are just barely sticking their toe into the water, and which ones are all in?
Well, yeah. So 5 years ago when I started, since I was looking for this information, I have a lot of contacts in Big Four and even smaller firms working with my clients in Portland and Bend. And I could not find a single firm with more than 3 CPAs that would say, yes, I'm serving cannabis. None of them were. It was all just one-off person or bookkeepers. Now today that's greatly changed. There's lots and lots of CPAs, small firms serving 5 to 10 CPA firms. Just now we've got a couple of firms who I won't name that are 90 CPA firms that I know they're dipping their toes in. I know Markham LLP's got a cannabis division. They're a national firm that they're trying to launch into the space. Mm-hmm. Now, the Big Four is completely – I think the Big Four will be out until we're federally legal, which means we probably won't have industry guides. We won't have gap guidance and all that we have for normal industries until then. But I'm sure they're going to – my prediction is when they come in, they'll be ready to buy up smaller firms to gain market share quickly, because they're just like we're seeing in non-accounting, people like Budweiser and Coors and Coke, they all went in, and they will be in.
Yeah, I did read that Coke was dabbling with a Canadian cannabis company, and the other liquor company had already made that investment. Is that correct?
Yeah, Corona's made a huge investment. Marlboro just did a $2 billion investment. Budweiser is, I know, actively pursuing it. Coke.
They're in talks with some of our current clients, so they're ready as soon as it's time. They're ready to hit the ground running as soon as it's legal. Yeah. So it's like a 10 or $15 billion industry at this point, but just imagine how big it's going to get when all these companies jump on board.
Launch in, and so it'll be interesting to follow, and there will still be just endless amount of products with cannabis, everything from makeup to salves,
oil and gas,
food and plants, and just the simple plant, the people that just want to say smoke pot, the old fashioned, think of that industry like craft beer. There's going to be thousands of genetics and brands, and people are going to have their favorites, and there's going to be people more successful and less successful. But that's not to mention the thousands of other products that are going to have cannabis and CBD as well in.
Yeah, your idea about the Big Four buying out smaller regional firms makes a ton of sense to me, because in my mind as a marketing person, I'm sitting there going, if they're sitting on the sidelines and they're so far behind the times, how are they possibly going to catch up? And you answered it in a nutshell. They'll just buy out these other firms, which makes a lot of sense. That's the only way you can catch up and then retain those people to continue to service those industries. That's interesting. domestically, are there particular state CPA firms that are ahead of the curve versus other parts of the country?
As ahead of the curve on accounting or
on accounting? Yep.
So I
don't know if we can speak to that.
What I would speak to, because I've reviewed I've reviewed over 100 companies' tax returns and even non-clients, and I've referred many prospects to our students and various others, and we've served many clients, and just even I've turned down dozens. But what I've seen is really sloppy legal and accounting work, and I will just say that out loud. And I think what my hunch of what happened when Colorado went legal a few years ago, and then when Oregon, Washington quickly followed, you had a lot of people at the smallest level who maybe weren't successful in their practice, who saw both attorneys and CPAs or bookkeepers who said, hey, this is a great thing. I'm going to jump in. I wasn't successful elsewhere. I'm going to jump into this really early when nobody else wants it. And the way a lot of people are getting clients, and I know this because I've talked to so many CEOs, their whole pitch back in 2010 to 2012 was, hey, Mr. CEO, we can set this up. Don't worry about 280E. We're going to figure out how to avoid all tax. We're going to put everything in cost of goods sold. We're going to do all these tricks and set up 50 entities and 100 different tricks to avoid tax. And so what I think the first round of people into the industry really were not the best, and that's hurt the people, the CEOs that got in early and trusted these people. They're the ones getting hurt with these audits now. I think right now today, we're getting a lot more quality people that want to come in and get the need and help and learn and do things right. So it's definitely being upgraded, but the first round a few years ago was a pretty poor level from what I saw anyway.
And your comment on 280E, it kind of rubs me the wrong way, to be honest with you, since it's ingrained in my mind. But can you just explain that for those of the folks listening today that don't know what the Internal Revenue Code 280E is?
So 280E is the number, and it's funny. So when you talk to cannabis CEOs, they'll tell you they don't know anything about accounting, but they all know about 280E because 280E is the old drug code that they used to bust the cocaine warlords back in the 80s. And anyone can Google it. It's only one sentence, and it basically says, if your company traffics in a Schedule 1 drug, you do not get any deductions on your tax return or credits. And so if you sell cannabis or heroin, that's fine. It's Schedule 1. It's illegal. You're not supposed to be doing it. But even if you are doing it, you're supposed to file a tax return. So you could literally be selling heroin. That could be your business, and it's illegal, and you could go to jail forever for it. But you're supposed to file a tax return. And so if they ever do catch you, that'll be a big thing they'll hit you with, because federal crimes, I believe, you can't get parole and tax evasion. So cannabis people, it's unfair to a cannabis company. So your state says it's legal to be a dispensary, but yet you can't deduct anything in your federal tax return. So the one thing that you can deduct, and this is what makes cost accounting so important, is it's actually not a deduction. It's part of the definition of taxable income. So all of us accountants out there, CPAs, we learned GAAP accounting back in school and inquire. Well, in GAAP accounting, you have sales or revenues, and you have cost of goods sold, which is an expense. And what do you have? Sales minus cost of goods sold, that's gross profit. Well, the tax code has a different definition. They say sales minus cost of goods sold is taxable income. Mm-hmm. So under I think it's the 16th Amendment, cost of goods sold is not a expense, it's not a deduction, it's not a credit, it's simply part of the definition of taxable income. And so that was good news for cannabis companies because they could have a single deduction. The bad news was a lot of the early advice was abusing that deduction, and you'd find tax returns where sales were $4 million and cost of goods sold was $3.99 million, which the common sense smell test says that's not right. You'd be out of business. And so 280E is really simple. It's just like, okay, you can't deduct anything, but you can deduct cost of goods sold. Well, what is cost of goods sold at a farm or an extract? What we talked about earlier, it's really complicated. And actually, many of a farmer's costs do fall into cost of goods sold. So that's the good news. we can help them do it right, and we can help them pay a fair tax. And eventually, if 280 ever goes away, or if the cannabis gets off Schedule 1 and 2, then they can take normal deductions like other businesses.
And I don't know which of you is better suited to answer this question, but contrasting the accounting industry versus the legal industry, which of the two has adopted or embraced this industry and done a better job of accepting where things are going from a business perspective?
You said contrasting what?
The legal versus the accounting industry. I mean, which one has done a better job servicing the industry?
Attorneys versus CPAs.
Yeah.
Okay.
Yeah, so the attorneys definitely got in ahead, and people talk about risk and can I get sued or whatever, and it's funny to me that the attorneys, they got in way ahead of the CPAs. Bigger firms were serving them early on. But they had different license issues and I can't really speak to all those. So I can't speak to a lot of the advice. I'm hearing better legal advice now. I think I always caution CEOs when you get legal advice to get a second opinion and to use your common sense. If someone, because we had one yesterday, people commenting, well, what if I just put all these costs over in a separate entity? You can't just do things structurally or legally with the sole purpose of being to avoid tax. It does not work. And so if you have a legitimate reason for creating a separate entity or doing something and can demonstrate that to the IRS, then it might work. But just be careful on some of the legal strategies that are being touted out there.
Are there additional insights that either of you would like to share with our listeners? Recognizing that myself, I'm not further down the path. I'm not remotely close to being as close to this industry as you are, that you'd like to share with them so they, their eyes are open.
I would just share that if this is something that you're interested in, you're not too late. Like when I first started, which was a year ago, I thought I was too late. But really it's just getting started. It's still federally illegal. So, until it even becomes legal, it's still a brand new industry. There's a lot of opportunity here. There's a lot to learn. You can establish yourself as an expert pretty quickly because nobody else is doing it. So if this is something that you want to get into, I think now is the time to go ahead and jump in.
Andrew, any insights from you?
Yeah, I think it's a great time. And even originally when we started teaching people, they were coming to us from weird places like Georgia and Florida. And at first I was like, oh, maybe it's better to be in, say, California, where it just went wreck because there's just such a bigger market. But what we found out is, well, first of all, we tell, and I'll tell your listeners too, everyone should be reaching out to California if you're doing accounting because they're easy to find. We teach all of our work remote. So it doesn't matter if I'm in Oregon, I can have a client in California. And so every one of our students should reach out to California because it's bigger than the rest of the U.S. combined as far as from a cannabis standpoint. Mm-hmm. But that said, I think it's awesome. And some of my most successful students are in places like Texas or Alabama that are way, way behind because they're getting in on the ground floor and it's a chance for them to establish a name for themselves in their own state. They can start getting involved in some of the movements and advocacy and really get known in their local community where there's just absolutely nobody doing any of it. So I would say, get involved wherever you are, and if you want to learn more, we can advise you as well.
Oh, that's great. I really enjoyed this. It was educational for me. I appreciate you taking time out of your busy schedule, given the growth going on with your business and your clients' needs. For our listeners, if you enjoyed today's show, help us get the word out by leaving a review in iTunes in the ratings and review section and mentioning it to your accounting colleagues on social media. In closing, I'd like to thank Build Your Firm for creating and sponsoring the Accounting Marketing Doesn't Suck podcast, and Liz Gold with Rhino Girl Media for encouraging us to produce this podcast. And I just want to wish all of you a great day and good